Okay, right. Okay, right. So before we start, let me just do an orientation on the notes that you will have. Okay, so you should have firstly these notes, right? I call these supplementary notes. So make sure you have it. Sorry, not this one. Summary notes, right? Supplementary notes, summary notes. So this attachment, I think there are about 186 pages. Okay, so you should have these summary notes. Then next, you should have something called the workbook that looks like this. That's the first page, financial reporting, December 2022 workbook. Okay, and you should also have revision notes. Okay, but I will not put the revision notes here. Okay, so basically you should have three set of notes, right? One is the summary notes, then the other one is the workbook, and the last one is a very thin set of revision notes, right? So three sets. Okay, so everybody have that, huh? If you do not have it, then you have to request from FTMS on it for it. Okay, right. Then now we go straight to the exam focus, right? Your exam, of course, is going to be in the month of December. Okay, so what you should be expecting in your exam, of course, is there are three sections of exam, which I call it section A. Okay, then section B. And section C. Okay, so three main sections. So section A is worth, there are 15 questions at 2 marks each. Okay, so 15 times 2, of course, that will be 30 marks. Then for section B, it will be 3 case, right, with 5 questions. Okay, so 3 case with 5 questions at 2 marks each. Okay, section A, 15 questions at 2 marks each. Then section B, we have 3 cases with 5 questions at 2 marks each. And section C, of course, lastly, is the 2 long question at 20 marks each. Okay, so this will be the structure of your exam, right? This will be the structure of your exam. You have section A, section B, and section C. Right? Okay, so if you ask me what's the difference between section A and section B, right? Section A, everything is about MCQ. So in fact, section A and section B, right? These two are MCQ. Okay, these two sections are all MCQ. Right, the difference between section A and section B is section A actually are from all topics. Okay, section A from all topics. Okay, section A is from all topics. Then section B is what I call the story-based question. Right, story-based question. So it means to say it's something like they will test you on specific IAS. Okay, specific IAS. In other words, means to say it's a story-based question, right? Story-based. I call it a story-based, right? Okay, but they call it specific IAS. So maybe that question, 3 cases, right, is specifically testing you on IAS 16, maybe IAS 20, etc. So it's specific IAS. So do you see the difference between section A and section B now? Both are MCQ, but section A are from all topics, everywhere. Okay, then section B is from specific IAS. Okay, then for section C, we are required to answer 2 long questions. Okay, so these 2 long questions usually will be from 3 areas. Okay, will be from 3 areas. The first area, of course, is something called the consolidation. Right, consolidation. That's the first area. Then second area will be coming from what I call the trial balance. Okay, so they will give you one trial balance, then with multiple adjustment. So what's required? You are required to do SOCI. Of course, it's our P&L. With the information given, you are required to prepare a SOCI, SOFP, and now SOCE. SOCE stands for Statement of Changes in Equity. All right. So I see in recent exam, this is also becoming quite common. Right. So a lot of people, they only know how to do SOCI and SOFP. Right. Maybe they are not so well versed in SOCE. So be aware that you are required to prepare a SOCE. Okay. And number 3. Okay. Number 3 is either ratio analysis or cash flow. Okay, but nowadays cash flow is not so popular now, right? For cash flow is not so popular now. Okay, so you will not be expecting a full cash flow question of 20 marks. Quite impossible, right? It will not be possible. A full cash flow on a full question on cash flow worth 20 marks. I don't think so. But maybe they will ask you to prepare an extract of the cash flow, an extract. So maybe about 5 marks. They give you 5 marks to prepare an extract of a cash flow. Okay, in section C, that is possible. Okay, so as I say, cash flow, do not expect a full question, but be expected to be able to prepare an extract of a cash flow. Okay, so section C, 2 questions based on these 3 topics. Okay, so this is the format of your exam. You have section A, section B, and section C. So, of course, section C, if you ask me, will be the easiest. Okay, I would say section C is the easiest. Okay, not because the questions are easy. Section C to me is the easiest because it's predictable. Right? Section C to me is easy because it's predictable. Section C to me is easy because it's predictable. Right? Because I already know what question will going to be out in the exam. It's either console, trial balance, or ratio. So 2 questions based on these 3 topics. So that's why I say this is the easiest. Okay, very predictable. So if I'm you, all right, the exam strategy, of course, is to concentrate on section C. 20 marks, 2. So that will be 40. Right? So of course, I'm not expecting you to get 40, maybe get about 30, that will be good. Right? So you already have 30 marks before you start the exam. Okay? So remember one thing, ACCA reward the hardworking student. Right? ACCA reward the hardworking student. So what do I mean by hardworking student? Okay, there's no doubt, right? There's no doubt your exam, ACCA exam, the questions are difficult. Right? This one is not a rumor. There's no doubt. The exam question is going to be difficult. Okay, no doubt at all. Okay, but one thing is, as I said just now, ACCA reward the hardworking student. What do I mean? The questions that you will see in your exam, right, I will say is recycled. Right? Exam paper question, right, that you will see are recycled. What do I mean? Recycle means to say it's the same. Okay, it's the same. Right? You can expect about 60% is the same. But if you want to see the recycling effect, you need to practice at least 10 questions each. Right? Okay, so if you want to see the recycling effect, consolidation, I need to do 10 questions. Child balance, I need to do 10 questions. Ratio, I need to do 10 questions. Then you will be able to see the recycling effect. Understand? Then that's why I say ACCA reward the hardworking student. Right? Because you will see after you do 10 questions, right, 60% of the questions are repeating. Okay? But remember this, if you want to see the recycling effect, you must do at least 10 questions. If you do one question, right, then all is new. Right? Okay, so if you want to see the recycling effect, must be at least 10 questions. Then I guarantee you 60% will be the same. Okay, so this is the structure of your exam. The focus, of course, is on section C. Right, so here I have a mission here. Of course, I'm here for a reason. I'm here to help you pass your exam. So I'm going to tell you exactly what you need to do to obtain a specific mark. Okay, my mission here is not to let you be a prize winner. Okay, so please be aware, I'm here not to let you become a prize winner. My purpose here is to let you pass your exam. Okay, pass your exam. So means to say my objective for you is 65 marks and below. Okay, 65 marks and below. I will show you why I say 65 marks and below in a later part. Okay, so now, if you want to get 65 marks and below, right, you just need to do the things which I write here. Okay, firstly, you need to complete the summary notes. Okay, firstly, you need to complete the summary notes. Summary notes is what you see over here. Okay, this is called the summary notes. Can you see? Complete this. So why I call this summary? Because if you look at this IAS, right, for example, IAS 16, the first one that we are talking about, this IAS, right, total pages is about 11. I have about 11 pages for IAS 16. Okay, now if you look at the full-blown IAS standard, right, if you download from IASB, IAS 16, you will see IAS 16, right, easily is 30 over pages, right? Then some more, the version downloaded from IASB, right, is full of words, right? Then you look at my IAS 16, you see a lot of blanks, right? A lot of blanks and a lot of space. So what I'm trying to say is my IAS 16, right, whatever topics you see in this set of notes is already very summarized. Okay, you do not summarize anymore. Okay, this is the minimum that you need to study, right? So all this is I gather from so many years. I look at the exam, then I notice that these are the points that they like to focus. Okay, so whatever I have included here are important for exam and important for your work. Okay, I only have two things in my mind. One is important for your exam and important for your work. Okay, IAS 16, you see the full version, right? Some of it are not relevant, not important. Okay, not important in your work, they're not important in your exam. So those that are not important for your work and not important for exam, I will not include inside here. Okay, that's why I call this summary notes. Okay, so the rule of thumb is do not summarize anymore. Okay, right. So that's the first thing you must do to obtain a 65 marks. Summary notes. Then next is to attempt or MCQ on. Okay, don't worry, don't see all MCQ, then get worried. Attempt all MCQ on selected topics. Okay, attempt all MCQ on selected topics. Of course, the keyword is MCQ. So where do you get the MCQ? The MCQ is in your workbook, right? In your workbook, which is this attachment, right? The MCQ is in your workbook. So you see inside this workbook, you have a lot of MCQ, right? MCQ, all these are MCQ. Okay, so remember, I only asked you to do the MCQ. I never asked you to do other things, just MCQ, right? And not all MCQ. I only ask you to do MCQ on selected topics. Okay, so of course, the next question is what is selected topics? Okay, selected topics is what you see on the notes. All these, you see 16 all the way until IFRS 3, all these are called selected topics. Okay, this whole chunk here, all are called selected topics. Okay, so you just concentrate on all the MCQ on all these topics. That's called attempt all MCQ on selected topics. Okay, so it's not all topics, selected topics. All these are the selected topics. Okay, then one last thing that you need to do, okay, which is the all revision questions. Okay, so I can tell you this revision question, the focus is on your section C. Right, I'm focusing on your section C. So as I say just now, I want you to see the recycling effect. So for these 3 questions, right, this 1, 2, 3, I will give you 10 questions each. Okay, I'll give you 10 questions each for you to do. Right, all revision questions, section C. So that's about right, okay, about 30 questions. Okay, then most likely you will be able to get 65 marks and below. Okay, so actually it's not really a lot of things I need you to do, right? It's just the summary notes, then attempt all the MCQ and 30 section C question. Then you'll be able to get 65 marks and below. Right, so as I say, my focus is to help you pass your exam. I'm not here to let you become a prize winner. If your objective is you want to be a prize winner, then obviously you need to do more, right? If you want to be prize winner, then my suggestion to you is you need to read the textbook. Okay, if you want to be prize winner, you have to read the textbook. But if you're not aiming to be a prize winner, you just want a pass and not exceeding 65 marks, then this is what you need to do. Okay, so I always use this technique, has been proven, right? Has been proven. People just study all this, then they manage to pass their exam. Okay, so how I get 65 marks? So let me show you. Let me tell you how I get 65 marks. So usually after your exam, right, what I will do is I will actually communicate with you. Okay, when you get your exam result, I will ask you whether you pass or fail. Right, then of course, if you pass, then I will ask you what you study. Right, I'll ask you what you study and how many marks you get. Okay, so far I see those people that I interview, right, those that study only all these, right, the maximum marks they get is about 65. Okay, but they tell me they did not study other things already. They did not study the textbook. What they study is just based on this. Right, then the highest I have is about 65. Okay, so that's how I get 65. The marks, of course, range from 50 to 65. Okay, those, and one more thing, if you did not study these 3 items, right, okay, then sad to tell you on the first day, there's a very high chance you will fail the exam. Okay, this is the minimum that you need to study. Minimum, right? Okay, this is the minimum that you need to study. Actually, it's not much, right? Okay, I know you are working adults. That's why I also don't want to force you to study too many things, right? Okay, but these are the bare minimum. I will tell you along the way on how to do it. Okay, so remember, that's your plan. Okay, then next, of course, is the support I can give you. Support is, I can give you 2 support. Of course, one is the WhatsApp group. Right, you all have WhatsApp, right? WhatsApp groups, okay, WhatsApp group, I'll put it on the screen now. Okay, don't worry if for whatever reason you can't access to this WhatsApp group. This is a WhatsApp group. Any question, what you can do, you can actually ask me from here. Then my number, not very sure how you do it. My number is Singapore number +65. Okay, then 96148456. Okay, so if you have any question, you can text me. So now it's technology, right? We don't really use email. But email very troublesome. You still need to take picture, then upload, and then type. Okay, so now I think the technology is use WhatsApp. Then somehow I'm using a WhatsApp desktop, so it's easier. I will not need to look at my mobile phone and reply you. Okay, so I will type the answer out using my desktop. Okay, then whatever reason, if you still prefer to use email, I leave it to you. That's my email address here. Ivan Lim FTMS at yahoo.com. Okay, so this is the support I can give you. Try to add this WhatsApp group because what I will do is after the class, right, then I will send you whatever notes we have completed via this WhatsApp group. Okay, so end of the class, I will send you all the lesson notes from this WhatsApp group. Okay, so try to add this up. Okay, so are you able to add this? Yes, no? Okay, so I only have one who joined this WhatsApp group. Okay, only one. The rest, up to you lah, right? Okay, but as I say, the notes I will send from here. Okay, end of the day, the lessons, right? The end of the lesson notes I will send from here. Okay, I guess maybe you have not download the WhatsApp apps. Don't worry. I will flash you this screen, right? Many times, maybe during the break, end of the class, that kind of thing. Okay, so if you have not downloaded the apps, don't worry. I will still show this screen during the break time and at the end of the class. Okay, so I think this will be the best communication media, right? So maybe the one that you have, I'm not very sure whether FTMS send you a mobile phone, right? The mobile phone that they are having is not the new one, right? I changed my phone quite recently. So this is the new WhatsApp group, right? This is the new WhatsApp group. The one that you have, right, is not the latest one. Okay, my phone was so-called stolen. So actually the line that you might have might not be the one. Okay, so this is the latest one. So please join this WhatsApp group whenever possible. Okay, don't worry if you have not, then I will show this screen again during the break time. Then you can just add this WhatsApp group during the break time. Okay, so having said that, then now we can officially start with the lesson. Okay, so the first topic that we will be discussing, of course, will be this IAS 16. Okay, right. So before I start again, just a little note before we start. So if you have any question, right, try not to ask during the class. Means to say you do not unmute yourself and ask. Okay, I will give you a chance, right? So normally when I have my lessons ending part, right, maybe I completed a section, right, then I will go to the chat group and see if there's any question. Okay, you try not to ask me during the class because actually it interrupt my way of speech. So if somebody interrupt me, right, then I might forget what I want to say. Okay, so that's the reason why I say try not to interrupt during the lesson because I will forget what I want to say. Okay, it happened many times already. If you interrupt me, right, then suddenly I will forget what I want to say. Okay, so I will give you time. If you have any question, you can just type out in the chat group. Okay, Don't worry, I will look at the chat group quite often. Okay, and I will answer your question from there. Okay, all right. Okay, so if all is good, then we will start now. Okay, so IAS 16, for every chapter, right, as far as possible, there's always something called important learning point for exam. Okay, so for every standard, I have already identified what is important for your exam. So all these are the important things that you need to know for your exam. Okay, right. Okay, so now for every IAS, right, is something like a process, right? For every IAS is something like a process. It's a process. When I say process means what? There's always a definition, right? After you pass the definition, then you will go to the next step called recognition. Understand? So that's the meaning of process. Every IAS, there's a process. You need to pass the definition test before you proceed to the next step called recognition. Okay? Right. So what do I mean? Firstly, if you want to apply this IAS 16, right, you need to pass the definition test first, right? So for the definition test of PPE, property, plant, equipment, the first definition test is it must be tangible, right? So tangible actually means can see, can touch, right? Okay, tangible means can see, can touch. That's the meaning of tangible, right? So first thing, if I want to apply IAS 16, yes, make sure I pass the definition test first. For example, tangible, can see, can touch. If you can see, can touch, then I can apply IAS 16. That's what I'm trying to say. Okay, if I can see, can touch, then I will apply IAS 16. But what happens if I cannot see, cannot touch? For example, intangible asset. I cannot see, I cannot touch. So if I cannot see, cannot touch, obviously I can't apply this IAS 16 anymore. Okay, I can't apply this IAS 16 anymore. I will need to apply another standard. I will need to apply another standard, which is of course called IAS 38. Okay, so understand what I'm trying to say? Every IAS is a process. You need to pass the definition test first, right? If I pass the definition test, for example, can see, can touch, then I will proceed to the next step called recognition, right? So for example, if I fail the first test, it's not tangible, then obviously I will not go to the second step anymore. Okay, I will not go to the second step anymore, right? I will need to apply another standard. Okay, so that's what I mean by process. For every IAS, it's always a process. Okay, so now let's take a closer look at the definition of PPE. Right, okay, so they say help for use in the production of goods, right? Production of goods or services. Okay, produce goods, or the other one, supply services. Maybe I just give a color. Produce goods, or maybe supply services. Okay. Then of course, next I have something called renter to others. Okay. And the last one is this administrative purpose. Right. So three categories here: produce or supply of goods and services. Right. So this one very clear cut. If I have a machine, right, obviously I will use machine to produce goods. So example of PPE will be machine. Okay, right. So if I use the machine to produce goods, then it fall under the definition of PPE. Then I will apply IAS 16. Right. Okay. Then for services, of course, FTMS is providing services. For services, FTMS context, of course, will be chairs and tables. Okay, right. So that is produce goods or supply services. This one clear cut, everybody know. Okay, so what most people might not know is your PPE, right, is also applicable to renter to others, right? Also applicable to renter to others, right? So if you use the asset and rent to other people, then you can apply IAS 16. Okay, example of renter to others is taxi, right? Okay, so I think in Vietnam, we have Marlin Taxi, we have Taxi Group, correct? Okay, so in the accounts of Marlin and Taxi Group, those vehicle, right, they used to rent to the taxi driver. So to them, all these vehicle, they will apply IAS 16. Understand? Right? So if you use the asset and rent to other people, the standard you should apply is IAS 16. Okay, so as I said, this one maybe not many people are familiar with. Okay, so if you use the asset and rent to other people, please apply 16. Okay, and the last one is IAS 16 include administrative purposes, right? So administrative, usually I will want to say is accountant is considered admin staff, right? So example will be computer of accountant. Okay, right. So remember, accountant are considered admin staff. Accountant are considered admin staff. So next time, if you're having problem with this word, administrative, then just substitute with accountant. Then I think it will be more familiar to you, right? So if you see this administrative simply means accountant. That's all, right? Okay, can I just draw an arrow for you? Administrative simply means accountant. Okay, right. Then do bear in mind, IAS 16 include self-constructed asset. Right. So as the word implies, self-constructed. So maybe, for example, your business is construction, right? So if you want a building, obviously you will do it yourself, right? You will not ask another person to do it. Okay. So IAS 16 includes self-constructed asset. Okay. So of course, in section A of your exam, right, they will ask you A, B, C, D, which one is applicable to IAS 16? A, self-constructed asset. B, intangible asset. Okay, then of course you need to choose A. IAS 16 includes self-constructed asset. Okay, right. So that's the first part, definition. Now, once you pass this test, then next we look at the next test, which is called recognition. Okay, so usually this recognition, you will see this many times. So recognition, in my point of view, recognition simply means criteria, right? Recognition simply means criteria. Okay, recognition means criteria, right? So if you want to recognize as a PPE, you need to satisfy criteria. So the criteria are these. First one, probable future economic benefit and measure reliably, right? So these are the criteria of PPE. Recognition means criteria. So probable means what? Right? You see this word probable many times. Okay, probable in the context of IAS 16, it simply means very high chance. Very high chance. Okay, IAS 16 simply means very high chance. Right, then next we have future economic benefit. Future economic benefit, you will see this many times, right, throughout this financial reporting. Whatever financial reporting paper you will be studying, you will see this word future economic benefit. Right, so for future economic benefit, right, it means you can use or sell in the future. That's the meaning of future economic benefit, right? Okay, in simple English, it means you can use or sell in the future. Okay, that's the meaning of future economic benefit, right? And the last criteria for recognizing a PP in your account is you must be able to measure reliably. Right? Reliably. Okay, so what does that mean? Reliably means to say the amount that you recognize in your account, right, must be reliable. Okay, so usually amount is obtained from a professional. Okay, amount is obtained from a professional. Then if the amount is obtained from a professional, that means to say the amount is reliable. Okay, so let me give you one example. So for example, I'm talking about a building. Okay, so of course in Vietnam, we have a lot of building. Maybe we have Royal City, correct? Royal City is a building, right? So if I tell you Royal City is worth 20 billion, right? If I tell you Royal City is worth 20 billion, do you think it's reliable? Right? If I say Royal City is worth 20 billion US dollar, do you think it's reliable? Yes, no? You can type out the answer if you are comfortable. No? Yes? Okay, now mind. So if I say Royal City is worth 20 US billion, it's not reliable. Why? Because my profession is just an accountant. An accountant only know how to do debit and credit, right? So therefore, it's not reliable because my profession is just an accountant. In order to be reliable, right, it must be coming from somebody called a professional, right? So in this case, who are the professional who do valuation? There's a group of people who actually value asset. This group of people is called valuer. Okay, so there's a group of people who value asset, not just building. A lot of people thought valuer only value building, not just building. You can ask this group of people to value your machine for you too, right? This valuer can also value machine. Sometimes your machine is very big kind, right? Very big kind of machine. Then if you need a value of this machine, for example, if you want to get listed, you want to get listed to your stock exchange, then normally what they will do is they will revalue all their asset. Then they will ask these people to come in, right? So valuer will come and value your asset, not just building, can also be your machine. Okay, so that's the recognition. Recognition means criteria, right? Okay, so after I pass my definition test, after I pass my recognition test, so all passed already, right? So very good. All passed already means to say I can recognize the asset. I can debit PPE now, right? So everything is passed, then obviously I will be able to debit my PPE. So you can see I will debit PPE. But I have one little problem. The problem is I know I can debit PPE, but at how much? Okay, so that's the problem. After you pass all the tests, after you pass the definition test, after you pass the recognition test, then now I will be able to debit PPE, right? Able to debit PPE, but the problem is I don't know I should debit how much. Okay, so actually that's the concern. Right, maybe I can put this here, easier. Okay, so understand this part is talking about initial cost. I can debit PPE already after I pass all the tests, but how much should I debit? Okay, so this is something similar to what we face in our day-to-day life. Okay, so I give you one scenario. You try to visualize, right? So of course, a lot of us are doing accounts when we work. So say, for example, you receive an invoice from a supplier. Okay, your company bought a machine. You receive an invoice from the supplier. So maybe the number of pages is 20 pages, right? Okay, your company bought a machine, then you receive an invoice from the supplier. And I told you the number of pages on the supplier invoice is about 20 pages. So of course you say, oh, I buy machine. So buy machine means to say, I will debit PPE. Okay, so the problem is don't know how much, right? So what will you do? I just say the number of pages is 20 pages. So I think what most people will do is they will turn to the last page. They will turn to the last page, right? Then find the total amount, right? On the last page, I think there will be one column stating the total amount. Then what you will do is you will copy that total amount and debit to PPE. Okay, so that's very common, but of course, this is not correct. Okay, you can't do that. You can't turn to the last page and then find the total amount and that amount you debit to PPE. Okay, that's wrong. Okay, there are some rules to it. Okay, the rules all are stated here, called initial cost. So initial cost, basically, there are three areas, A, B, C. There are three areas. Okay, so A is what? Purchase price, including import duties, non-refundable purchases, taxes after deducting trade discount and rebate. That's A, right? Okay, so I know we are Asian. We don't like to see paragraph. We like to see point form. So actually A is here, right? A is here. Purchase price at VAT, add import duties less trade discount, right? So if I just do a calculation, right, this part, I will get about maybe 81,500. Okay, now, so I just want to ask you a question. There's one similarity here. Purchase price, VAT, import duties, and trade discount. These four items, right? There's one similarity. Are you able to see the similarity? They have something in common here. Purchase price, VAT, import duties, and trade discount. That's why it's grouped under A. Right? Are you able to see the similar point? Any suggestion? Yes? No? They have something in common here. This A, purchase price, import duties, purchasers tax, and this trade discount. They have something in common. Okay. Right. So no, right. They are all purchase costs. No. No. This one is not the distinct feature about this A, right? So for this A, right, you notice all these, right, happen at the point of purchase, right? A, purchase price, VAT, import duty, trade discount, all happen at point of purchase. So if you ask me what is A, right, I will say A, all the transaction happen at point of purchase. Okay, so I think that's the feature about A, right? So of course it's a purchase price, but I would say B, right, is also purchase price. Can see A is purchase price, then B is also purchase price, C is also purchase price. But what we want to know is the difference between A, B, and C, right? So for A, right, I would say it happened at the point of purchase, right? So if you remember, trade discount is given at the point of purchase. Then same thing for your VAT and your import duties. So that's A. Okay, right. Then B, any cost directly attributable to bringing the asset to the location and condition necessary for it to be capable of operating the manner intended by the management. All right, so this is your English. So let me translate this English to you. So what they're trying to say is this for B. B means to say is any cost required to keyword first use the asset. Okay, so B is any cost required to first use the asset. The keyword is first use the asset. Any cost required to first use the asset. Okay, so you just need to ask yourself this question. When do I incur this cost? You got two answers. Before first use or after first use. If it's before first use, right, then it will be B. Understand? Right. Then, of course, if you incur the cost after first use, then it will fall outside this B. Okay, so let me give you an example. Do you see here? I choose one easy one first, right? Installation cost. Right, installation cost. When do you incur installation cost? Before or after you first use the asset? Installation cost. Before you first use or after you first use? Before, correct? Okay, so that's why it's here. Understand? The keyword is before you first use. So now, if you understand this, then it'll be easier now. Right, so cost of site preparation. This one is the general term. The keyword, of course, is site preparation. So I only can tell you one example. So, example, you are going to buy one very, very big machine. The machine is so big that it's going to occupy the entire level 2. Right? A very big machine. So big until you occupy the whole level 2 of the building. Right? So before you bring the machine into level 2, right, you have to ensure that the floor is even. Floor, F-L-O-O-R. You have to ensure that the floor is even before you can bring in the machine. Okay, so that is example of cost of site preparation. Okay, so if the floor is uneven, right, you can't bring the machine in, right? So if the floor is uneven, then obviously you need to do something called even the floor. Okay, this is the commercial word. They say it's level and uneven floor. Okay, so that's called cost of site preparation. Okay, so cost of site preparation, as I say, is very general. So one example of cost of site preparation is level and uneven floor. Okay, so obviously you will incur this cost before first use of the asset, right? You will incur this cost before you first use the asset. Okay, so of course that will include. Then delivery cost, I already told you, you incur before first use. Then next we have installation, just spoken. Installation before first use. Then pre-production, the keyword of course is pre. Pre means before you first use. Then professional fee, example of course will be a lawyer fee. Right, lawyer. So example, if you buy a building, you will need to engage a lawyer, right? If you buy a building, you need to engage a lawyer. So ask yourself this question: when do I look for the lawyer? Before I buy or after I buy? Okay, so obviously you look for the lawyer before you buy, right? So therefore lawyer fee fall under here. And lastly, we have a staff cost, right? So staff cost, maybe for example, you will use existing staff to help on installation. Okay, so you meet a very stingy boss, correct? Your boss want to save on installation fee. Then what to do? Ask your existing staff to help. Right, so if you have this, then of course the salary of all these staff, right, you will need to include under PPE, means to say you debit PPE. Right, so do you see all these, right? We all incur before first use, right? Okay, then of course, let me just fast forward. There will be some items, right, which you will incur after you first use the asset. So example, fast forward, do you see maintenance? Maintenance costs. When do you incur maintenance costs? Okay, so as the word imply, maintenance, right? Obviously, I will incur maintenance costs after I first use, right? So therefore, for maintenance costs, right, you will need to exclude. You can see, hopefully now you understand, because maintenance cost is incurred after first use. That's why you need to exclude. Okay, this is incur after first use. Right? Maintenance cost is incurred after first use. So that's why you need to exclude. Okay, so that's B. B means ask yourself this question: when you incur the cost, before first use or after first use. If it's incurred before first use, then very good. You can debit to PPE. Right. If it's incurred after first use, for example, maintenance cost, then obviously you can't debit to PPE. Right. So remember, what we are trying to do now is trying to find out how much you can debit to PPE. How much you can debit to PPE. So remember the example I said just now, 10 pages of invoice for buying a machine. I can't go straight to the last page and debit the total amount to PPE. I can't do that. In actual fact, I need to look at item by item, right? I need to look by item to see whether I can debit to PPE. Some of the item you can't debit to PPE. For example, maintenance. Right? Okay, so be very careful next time when you receive a 10 pages invoice. Please don't go turn to the last page, find the total amount, and then debit straight to PPE. Okay, technically it's wrong. Okay, right. The last one. Last one is called future dismantle cost. Right? So this future dismantle cost is actually governed by IAS 37. Maybe tomorrow we will complete IAS 37, right? Okay, tomorrow. What is future dismantle cost? Okay, future dismantle costs, firstly, have to tell you, not every asset will have future dismantle costs. Not every asset. Only complex asset, you will have future dismantle costs. Okay, example, right? Example is, of course, I need to ask you where oil come from. Oil. Oil come from where? Oil, of course, please don't tell me come from supermarket. It's not from supermarket. Oil actually come from the sea, right? Okay, oil come from the sea. So I put it here. Oil come from the sea. Give me a second, huh? Okay, oil come from the sea. You extract oil from the sea. Okay, so how you extract oil from the sea? You build a machine, whatever, correct? You build something here, then you extract oil from the sea. Okay, actually that machine is called oil extraction platform. Okay, it's called oil extraction platform. So this is an example of complex asset. So remember, this IAS 37 is not applicable to all asset. It's only applicable to complex asset. Okay, so it's not all asset will have future dismantle cost. Only applicable to complex asset. Okay. Future dismantle cost only applicable to complex asset. An example of complex asset is this oil extraction platform. Okay, that's the first thing. Future dismantle cost not applicable to all asset, only applicable to complex asset. Example is oil extraction platform. Okay, so of course we know oil, we extract oil from the sea. Oil is not forever. So maybe after 10 years, there will be no more oil, right? No more oil after 10 years. Then the thing is, after 10 years, what do we do with this oil platform? Do we leave it there? 10 years later, no more oil, or just dump it here? Okay, then don't care. Leave it there to rot. Obviously, no, right? This oil platform, you need to dismantle it, right? You need to dismantle it 10 years later, for example, right? So that's why we have this thing called future dismantle cost. Understand? Right? Okay, then next thing is everybody know $1 today is not the same as $1 in 10 years' time, right? So therefore, we need to do something called discount to present value. Okay, discount to present value, nothing special. If I tell you the future dismantle cost is 18,000, discount rate is 5%. So if I want to discount to present value, I will simply just use 18,000. Okay, I will just use 18,000, then divided by 1.05, 10 years later, right? 10 to the power of 10. Okay, then if I press my calculator, then roughly I think I will get this maybe 11050. Okay, I will get 11050. Okay, then of course, now we can do a summation. A is this price, 81500. Then B, of course, what I need to do is I need to add this up, right? If I add this up, then maybe I get about arithmetic, no worries. If I add this up, I get about 28600. Right, then C, of course, is this 11050. Okay, so this is B and this is C. Right, so if I want to debit PPE, very simple. I just need to add A, B, and C. That will be the amount I can debit to PPE. Right, just add A plus B plus C. Right, so therefore, the amount that I can debit to my PPE will be equal to about 121,150. Right, okay, and how do I get it? It's equal to this 81,500, then plus 28,600, then plus this 11050. Okay, so that's this part on initial cost, right? So hopefully you remember what's initial cost. Initial cost means to say the idea is trying to find out how much you can debit to your PPE, trying to find out how much you can debit to PPE. That's the unique point about this part. Okay, then if you look at here I have some items that you need to exclude. So all these exclude, obviously you don't ignore it, right? When I say exclude, means to say you can't debit to PPE. Obviously, you need to debit to somewhere. Okay, so all these I can't debit to PPE. Where do you think I will debit to? Okay, I can't debit to PPE, but I still need to debit somewhere. If I don't debit to somewhere, then of course my double entry cannot balance, right? So any guess where should I debit all these to? Any suggestion? No, right? Okay, so all these, right? You should not debit PPE, that's for sure. 1050, then from 1.05, right? 1.05. Okay, then 5%. 10 years. Right? Okay, and 5%, so 1.05. If 10%, 1.1, then 10 years time. Yeah, right. So all these, right, you should debit to expense. Right, all these you should debit to expense. You cannot debit to PPE. Right, so remember all these you should exclude. Then obviously you can't ignore. You need to debit to expense. Okay, so now let's take a closer look. Administrative costs, I think I told you just now, if you have problem with this word administrative, right, just substitute with this word called accountant. Right, then you will know accountant salary has nothing to do with your PPE, right? And see, right? So accountant salary, of course, is an expense. Then what is staff training? How come staff training you should exclude? Now, I say one thing, for staff training, right? Even though your staff training is incurred before first use of the asset, you still need to exclude. Okay, so I'll repeat one more time. Even though your staff training, right, is incurred before first use of the asset, you will still need to exclude. But of course, the reason is why. How come staff training, even though I incur before first use, I still need to exclude? Anybody? How come anybody? How come staff training, even though it's incurred before first use, I still need to exclude? I give you a clue lah. You think about it, think about the logic. Okay, now if I can't include, right, means to say I cannot debit PPE. Correct? Okay. Correct. I think that's the answer because staff will not work forever. Okay, very good. Okay, now actually let me lead you to the answer. Just now I say if I can't debit to PPE, means to say I must be fail the criteria. Correct? That's why I can't debit to PPE. So it means to say somehow or rather I fail one of the criteria. So that's the reason I cannot debit my staff training to PPE because I failed the criteria. So remember, if you want to debit to PPE, yes, make sure you pass all the criteria. If you fail the criteria, means to say you can't debit to PPE. So I failed the criteria here, one of them. Okay, so which one do you think I failed? Staff training. Okay, anyway, the answer is already there. One of the friends already posted the answer. Because the staff will not be there forever. Okay, actually you fail this probable criteria. Okay, probable. Why? Okay, so give you one example. So let's say, for example, FDMS, of course, let's say FDMS is my employer, FDMS provide staff training to me, right? So of course, I'm FDMS staff. If they provide staff training to me, means to say they send me to study a professor degree, right? Or doctorate degree. Then maybe after I study a doctorate degree, then I become Dr. Lim, right? This is called staff training. Okay, then what happened? Okay, what happened is this. After I obtain my doctorate, right, I will tell them, thank you very much. Thank you. And most important thing, bye-bye. Okay, right. So means to say your staff the staff training is not probable because your staff can resign any moment. Okay, so that's the reason why staff training, right, you exclude because you fail the criteria of this probable test. Your staff can leave anytime. Okay, unless you tell me your staff sign a lifetime contract. Okay, unless your staff sign a lifetime contract, then okay, you can debit to PPE. But I don't think there's a lifetime contract now. Okay, I don't think there's a lifetime contract now. So that's the reason why staff training you should exclude. Okay, right. And lastly, mistake. Mistake. Obviously, I should not capitalize. I should expense off. So all these you still need to debit somewhere. The only thing is you can't debit to PPE. Right. So for mistake, then that's why I need to debit to expense, right? I got no other choice really. So I have to go to expense. Prudence concept, right? Mistake, wastage, all these, of course, you will not want to overstate your asset. Then you have to put it somewhere. Of course, it have to be expense, right? Prudence concept, right? Prudence, remember, do not overstate your asset. Okay, so that's the first part, initial cost. So hopefully all is good now. So we solve the first one, initial cost. Right, then now we talk about subsequent expenditure. Right, so what's the meaning of subsequent expenditure? So subsequent means after, right? So I go and spend money on an existing asset. That's called subsequent expenditure. I go and spend money on an existing asset. Okay, spend money on existing asset. Subsequent expenditure. Spend money on existing asset. Okay, then also very simple. We try to use logic to work this through. If I spend money on existing asset, right, two things can happen. After spending money on the existing asset, two things can happen. The first thing is after spending money on the asset improve. Okay, after spending money on the existing asset, two things can happen. One is the asset improve. Then, of course, the other one also common sense, no improvement. Okay, so logical. Subsequent expenditure on non-current assets, spend money on existing asset, two things can happen. Either asset improve or no improvement, right? Okay, so of course, in accounting wise, right, improve the asset, the accounting word to describe is called upgrade. Right, so if you see this upgrade, it means there's improvement to the asset. Right, then no improvement, I think the word is maintain. Right, okay, then of course some example of improving the asset. Maybe for example, I change maybe cement to marble flooring. That's improvement, correct? From cement to marble, obviously that is improvement. Okay, then example of no improvement is repair a faulty machine. Repair a faulty machine, right? So hopefully if you look at this word, if you Google the meaning of this word, repair, they will tell you repair means restore or bring back to the original state, right? Restore or bring back to the original state. So in other words, means to say there's no improvement. All right. Okay, then let's talk about the accounting treatment now. So accounting treatment, let's talk about the easy one. If there's no improvement, right, then you should expense off. Okay, so hopefully now you understand how come repair cost is expense off. A lot of people, they don't understand. They just say, oh, repair cost is expense. Then people ask why? Oh, because it's expense. No why. Why repair cost you should expense? Because it's expense. Okay, that's a wrong explanation. So if people ask you how come repair cost you should expense off, then you tell them because repair there is no improvement. In line with IAS 16, you should expense off. Okay, reason is because there's no improvement, right? Okay, so that's why you expense off. Okay, so that is the accounting treatment for no improvement. Then now we talk about improvement. If there's improvement, of course, must be the opposite, right? Opposite of expense of must be capitalized, right? Okay, opposite of expense of must be capitalized. Okay, and of course, don't forget to depreciate. Okay, so this is the accounting word. In short, it means debit PPE. Expense of, in short, it means expense of. Debit expense. Okay, so that's the accounting treatment. No improvement, debit expense. If there's improvement, debit PPE. Right, then of course, if you debit PPE, then don't forget to do depreciation. Okay, right. So now, of course, your exam will not be so friendly. Your exam will not be so friendly to tell you, or there's improvement or there's no improvement. They will give you some scenario. Then you need to decide whether there's improvement or no improvement, right? So what you see over here are some of the scenario to tell you there's improvement. I call this something like the evidence. Evidence telling you there's an improvement. Evidence. Okay, so something like that will appear in your exam. They will say the company spent money on existing asset. After spending money on the existing asset, the useful life increased. Useful life increased from 10 years to 20 years. Okay, so that's evidence of improvement, right? So the expenditure I should debit to PPE, right? Then the other one maybe production capacity increase. Production capacity increase means what? Last time my machine can only produce 10,000 a day. After spending money on the asset, now my machine can produce 50,000 units a day. So that's called increased production capacity, right? Improve quality means maybe, for example, after spending money on the asset, then now I have maybe lesser wastage. Okay, maybe last time out of 10 units produced, 2 will be spoiled. Then now out of 10, maybe 1 will be spoiled. Lesser wastage. And the last one is future economic benefit, right? So example of future economic benefit will be after spending money on the asset, then now example is I can sell at a higher price. Okay, now I can sell at a higher price. So if they tell you, they will not tell you there's improvement, there's no improvement. They will give you scenario. Then you need to analyze yourself whether there's improvement or not. Right. So they say after spending money on the asset, now I can sell at a higher price. So that constitute an evidence for you to debit PPE. Okay, right. So what you should do if you see a question on capitalize and depreciate for improving the asset, this is what you need to do. So if you see a question and you have conclude that there's improvement, then you should capitalize and depreciate, right? And that's what you need to do now. Okay. Firstly, what you need to do is to calculate the carrying value. You need to calculate a carrying value, okay, at the date of upgrade. So carrying value always have a date. Firstly, what I need to do is to calculate the carrying value at the date of upgrade. Okay, so say for example, you calculate a carrying value at date of upgrade, maybe for example, 8,000. Okay, firstly, existing asset, go and calculate the carrying value at date of upgrade. Then next, of course, you add the upgrade. Okay, you will add the upgrade. Okay, so hopefully why you add? Because the accounting treatment for upgrade is to debit PPE, right? You add upgrade because the accounting treatment is debit PPE. That's why you add. Okay, so say for example, the upgrade value is 500. example, 500. You add. So now my asset now will be 8,005. Okay, right. Then thereafter, of course, I will need to calculate my depreciation. Okay, I will need to calculate my depreciation. Okay, then of course, depreciation, if let's say I'm using a straight line method, everybody know straight line method is using cost minus scrap divided by useful life, correct? Everybody know to calculate depreciation is always use cost minus scrap divided by useful life. Okay, so if there's a upgrade, right, the depreciation will be calculated based on what you see on the screen now. Instead of using cost, right, I will use this 8,005. Okay, instead of using cost, I will use this 8,005. 8,005, of course, is from here. Okay, then as opposed to minus, if there's any new scrap value, right, I will use the new scrap value, if any. Okay, so I will minus any new scrap value, if any. Then normally I will divide by useful life, right? Okay, so if there's upgrade, I will divide by any new useful life, if any. Okay, so of course, because it's upgrade, correct? Upgrade, maybe after spending money, your useful life will increase. So if there's a change in the useful life, you will use the new useful life, if any. If no, right, then you will use remaining useful life. Okay, so that's how you calculate your depreciation based on so-called this formula. I will not say it's a formula. Okay, based on this so-called formula, right? Okay, so I will not use the cost anymore. I will use this 8,005, then minus away new scrap value, if there's any, then divided by new useful life, if there's any. If not, then I will just use the remaining useful life. So say, for example, my depreciation value, let's say, is 200. Okay, then of course I will get the answer called, some people, they call it carrying value after upgrade. Okay, then some people, they call it carrying value at SOFP date. Right, okay, then of course the number must be 8,005 minus 200, which will be 8,003. Okay, so that's what you should do if you see a question on upgrade. The steps are all here. Firstly, calculate the carrying value at the date of upgrade. Then, of course, you add the upgrade cost. Then depreciation will be based on this 8,005. Okay. Then the next thing is you must know how to present your answer. So remember, your exam is about financial reporting. So financial reporting, they are only interested in two numbers. One is SOCI and one is SOFP, right? Okay, so obviously the number that you should report in your SOCI must be this 200 SOCI. If they ask you the number to be reported in SOFP, then it should be this 8,003. Okay, right. So it's important to know what they are asking for. Don't give them the wrong answer. So a lot of time, right, people know how to do this working. Okay, I have absolute confidence in you that you'll be able to do this working. But the thing is, you give them the wrong answer. If they ask for SOFT, right, you write 200, then you get 0. That's why people fail the exam. Don't know why. Okay, so they know how to do the working, but they give them the wrong answer. Right? So that is subsequent expenditure. So hopefully, you understand the concept now. Subsequent expenditure means to say you spend money on existing asset. Right? So two things can happen. One is there's improvement, and the other one is there's no improvement. Right? So no improvement, accounting treatment, expense off. If there's improvement, accounting treatment is to capitalize and depreciate. Okay, right. So if you see it's a improvement scenario, then you just need to apply what you see over here. Okay. Then lastly, we have something called overhaul. Right. There's something called overhaul. Okay. So what's the overhaul? Overhaul, it means a major inspection. Right? Overhaul means to say it's a major inspection. Not the minor inspection. Talking about major inspection. So the keyword is major inspection. So usually if you ask me to think about example, right, I will say some asset that is life threatening. If it's threaten your life, right, then it's subject to overhaul. So example, I can think of asset that is life threatening. Okay, example, of course, is aircraft. Okay, so aircraft, they need to do major inspection. So when I say overhaul, I do not mean the inspection that they do every day before departure. No, all right? I'm talking about the major inspection. So aircraft are subject to major inspection. Another one I can think of will be leave. Right? Your leave is also life-threatening. So your leave is subject to overhaul also. Okay, major inspection. Right? Okay, so what is accounting treatment for all these overhaul? Right? Okay, accounting treatment is to capitalize. Right? So I think you will know what is capitalize. Capitalize means what? Capitalize means debit to PPE. Right? That's the meaning of capitalize. Debit PPE. Right? Capitalize, you see, as a separate component. So separate component means you go and subdivide. Okay. So maybe I don't use PPE. I put another one. I put aircraft. Aircraft is a PPE. I debit aircraft as a separate component. Separate component means overhaul. That's the meaning of separate component. Okay. Ultimately, it's still a PPE. You just capitalize as a separate component. Right? Okay. Understand capitalize? Capitalize means debit PPE. Then separate component, you just give a separate component. You just call it overhaul and depreciate over the period to the next overhaul. So what does that mean? So for example, if every 5 years, I need to conduct a major inspection on my aircraft, right? Then I will depreciate this overhaul cost every 5 years, right? If every 3 years I need to conduct this overhaul, then I will depreciate over 3 years. Understand? So depends on the asset. So usually I think for aircraft, they need to do it every 3 years. Okay, then leave, right? Okay, leave, this one actually you can see. Next time when you are in a shopping center or going to your office, right? I think on the leave, on the right-hand side of the leave, right? There's some certificate. There will be a certificate printed there, right? Then on the certificate, they will display when is the last major inspection done. Okay, so it depends on your country. So next time when you are in a leave, right, then you can actually look at the certificate. Okay, so that's the major overhaul we are talking about. Okay, so they need to do a major inspection maybe every 3 years or maybe every 4 years. Okay, so accounting treatment, remember, is to capitalize as a separate component. And then depreciate, remember to do depreciate over to the period to the next overhaul. So if your major inspection is every 5 years, then you will depreciate over 5 years. Okay, so usually life-threatening asset, aircraft, leave, then the one I can think of is another one will be your escalator. Escalator. Shopping center, we have escalator, right? So escalator is also subject to overhaul. Okay, all right. So this is what you need to do for subsequent expenditure. Hopefully, we are clear on this subsequent expenditure on an existing asset. So two things can happen, improvement or no improvement. All right, okay. Next, this part is just a little theory, right? A little theory to cater for section A, right? Okay, first question is why must we do depreciation? Somebody say must do, right? Who is that somebody? The somebody definitely is not me, right? Somebody say must do. The somebody is called framework. Framework say must do depreciation. So which part of the framework? Okay, so framework, there are many parts, right? Framework, we have concept. And which concept? Accrual concept say so. Accrual concept say must do depreciation. Right? So something like this will appear in your section A. They will ask you which accounting concept states depreciation needs to be done. Then choose this accrual concept. Section A, very easy marks. Accrual concept. Okay, just in case you don't know. Accrual concept is the one that let us do that require us to do depreciation, accrual concept. Okay, then now we have some main depreciation method. Everybody know we have straight line, we have reducing balancing method. So straight line, of course, everybody know is cost minus scrap divided by number of useful life. Okay, then alternatively, it can be calculated based on a percentage given times cost minus scrap. Okay, so the thing, of course, is we are interested is this percentage, right? How is it calculated? Okay, then of course you will tell me, usually exam paper they will provide, right? Exam paper will provide this percentage, but we are accountant, right? We cannot tell our boss, you need to provide me the percentage because usually my exam paper will provide. If you don't provide me this percentage, I can't do. Okay, so this percentage, right, come from where? So for example, 10%. How they get 10%? Okay, so I tell you, now this percentage actually depends on your useful life. Okay, depends on your useful life. So for example, if my useful life is 5 years, right, then of course this percentage divided by 5 will be 20%. Understand? Right? So this percentage depends on your useful life. If your useful life is 10 years, then that will be 20%. If your useful life is 4 years, then that will be 25%. So on and so forth. Okay, right. So everybody know this one straight line. Okay, but the thing now, I think most of you don't know is reducing balancing method. Percentage come from where? Right, for your reducing balancing method, percentage come from where? Right, okay. The answer is, I guess you don't know, right? It comes from a formula. Okay, so of course you're not required to know the formula. Okay, but I have other meaning to tell you this formula, right? The formula looks like this, is equal to 1 minus n here Okay, then here I will have scrap value over cost. Okay, so this is the formula to calculate the percentage of this reducing balancing method. Okay, so 1 minus n scrap value over cost. So as I said just now, you are not required to know this formula, right? I show you this formula is because of other reason, right? So now I will show you the reason. Now, your teacher will have told you if you are using this reducing balancing method, right, you will actually ignore scrap value. You will ignore scrap value. Okay, I'm very sure your teacher will have told you if you are using reducing balancing method, you should ignore scrap value. But what's the reason for ignoring this scrap value? Okay, so now I will tell you the reason. Very simple. You ignore scrap value, right? Because the formula already taken into consideration the scrap value. That's why you ignore it, because the formula already taken into consideration. So therefore, when you calculate reducing balancing method, right, you do not minus one more time. Right? If you minus scrap value one more time, right, then that will be double counting. Understand? All right. Okay. So that's the reason why reducing balancing method, you ignore scrap value. You do not minus. Okay, because the formula already taken into consideration scrap value. Okay. Now, the more important thing is this: if there is no scrap value, right, you cannot use reducing balancing method. If there's no scrap value, you cannot use reducing balancing method. Why? It's mathematics. If your scrap value is equal to 0, 0 divided by something will become what? 0, correct? So do you think you can square root a 0? Okay, no, right? Okay, so something like this may appear in your exam. Okay, now we are doing FR, not so easy anymore. They will not tell you, or please use straight line method, or please use reducing balancing method. They just need to say 10% no scrap value, right? So if they just say 10% no scrap value, means what? Confirm must be straight line method. Because if you do not have a scrap value, you can't use reducing balancing method. Okay, right. Okay, so that's one thing. And the next thing is now we need to know exactly when should you start depreciation, right? When should you start depreciation? Okay, so I got two choices here. The day when your asset is available for use, or the day I start to use the asset. So I give you a choice. Available for use, I call this A. The day you start to use the asset, I call it B. So the question is, when do you start depreciation, A or B? Any suggestion, A or B? Don't be shy, right? A, correct. When the asset is available for use, right? Okay, the answer is correct. A, when the asset is available for use. This is the answer. This is the point you should start your depreciation. Okay, based on very simple reason, based on logic. So let's say, for example, I have a car. Okay, so car, let's say now a car now is year 2022. All right, so let's say a car, don't know how much is it worth in Vietnam, don't know. Let's say, for example, a car is USD 50,000. You bought a car now, USD 50,000, you buy one car. Okay, then maybe 10 years later, you want to sell the car. 10 years later, I sell the car 2032. I want to sell it. Do you think I can tell the buyer, I'm going to sell you the car 10 years later, I'm going to sell you US 50,000 because I have not used the car before? Do you think the buyer will accept? Okay, 10 years later, do you think you can tell the buyer, I'm going to sell you the car the same price, US 50,000. Reason being, I have not used the car before. Logically, the buyer will not agree, right? Okay. So therefore, depreciation, right, always start when your asset is available for use. Okay. Based on logic. Even though you have not used the asset, your asset will still depreciate. Okay. The next question is this. Which method should you use? Should you use straight line method or should you use reducing balancing method? Okay. So if you see, they have given a guideline. They say which method you should use. The answer is a method which will provide a more true and fair profit. Right? So true and fair profit in the context of financial reporting, true and fair profit, it means matching. Matching means true and fair profit. Okay, so if you read the textbook, they will often say plant and machinery. You should use reducing balancing method. Plant and machinery, they encourage you to use reducing balancing method. Okay, then for chair, right? Chair, they will ask you to use a straight line method. Okay, so this one is by default. By default, if you read the textbook, they will say, plant and machinery use reducing balancing method. Then chair use a straight line method. Okay, but the thing is why? How come plant and machinery have to use reducing balancing method? Okay, so I'm going to show you the answer, right? Textbook. The answer is because of matching. Right? Okay, so for plant and machinery, so remember, the method they are using is reducing balancing method, right? This is the method they are using, reducing balancing for plant and machinery. So can I modify a little bit? Year one, right? So year one, can I say is something like early years? Year one means early years, right? Year one actually has the meaning of early years, right? That's the meaning of year one. Then year 8, of course, it means later years. Okay, right. Okay, so plant and machinery. Let me ask you one question. Plant and machinery, the repair cost for plant and machinery in early years, means year one, do you think is high or low? Plant and machine, if I repair in the early years, the repair cost in early years should be high or low? Machine, early years, repair cost high or low? Low, correct. Okay, so this part is low. Repair costs in early years is low. Right, then depreciation, you are using reducing balancing method. Right, so reducing balancing method actually looks like this. Let me just do a simple illustration. Reducing balancing. All right, so reducing balancing, everybody know how to do it, right? So for example, cost, let's say, is 10,000. So reducing balancing method, I just put one example, 10%, maybe like 10%. Then depreciation for year one, of course, will be 1,000, correct? Then now my carrying value after year one will be 9,000. Okay. Then next depreciation for year two, of course, will be 900. Okay. Then so on and so forth, right? Not interested. I just want to ask you one question. Year one depreciation is 1,000, correct? Then year two depreciation is 900. If I'm using reducing balancing method, right? My year three depreciation, obviously will be lower than 900. Can see? Depreciation for year 3 will be lower than 900. So therefore, if I'm using this reducing balancing method, right, my depreciation supposed to be higher in the early years. Can see? This is the feature about reducing balancing method. Okay, depreciation will be higher in the early years, right? Then as the years goes on, depreciation will be lower. Okay, then very simple. Repair cost, one low, one high, right? So remember I say matching, right? One low, one high, your profit balances. Okay, your profit will balances. Okay, then now I can tell you the conclusion. When to use reducing balancing method and when to use straight line method. Very simple. If your repair costs fluctuate, like what you see here, okay, then you will use reducing balancing method. Okay, very simple. I'll repeat one more time. Which method you should use? Reducing balancing method or straight line method? Very simple. Depends whether your repair costs fluctuate. If your repair costs fluctuate, right, like plant and machinery, then you need to use reducing balancing method. Okay, so obviously, if your repair cost does not fluctuate, then you will use a straight line method. Okay, so ultimately depends on your asset. If the repair cost fluctuate, then use reducing balancing method. If not, straight line method. Okay, so let me just complete this. So machine in later years, of course, my repair cost will be higher, right? Then my depreciation under reducing balancing method will be lower, right? So therefore, my profit will balance. Okay, right. So for this page, right, what is important for your exam is this. So firstly, remember, if there is no scrap value, you cannot use reducing balancing method. This is important for exam. They will not be so nice to you anymore. They will not tell you, please use straight line method or please use reducing balancing method. That's one thing. And another thing which you need to know for exam is when to start depreciation, this part. So remember, depreciation, you will start depreciation when your asset is available for use. Okay, right. So that's one part. This one more to theory lah. This one more to theory part. Okay, then next we talk about change in depreciation estimate. Right, change in depreciation estimate. So firstly, we must know what are the elements of depreciation estimate. What are the elements? Right, so you see 3 boxes here. So there are 3 elements to depreciation estimate. The first one is residual value. Okay, residual value is one element of depreciation estimate. Then we have useful life. Okay, then the last one, we have depreciation method. Okay, then of course, it will be good to bring this section to our day-to-day life. Okay, so of course, how it will affect your day-to-day life when you do an account is, of course, maybe what I can think of is this. Maybe, for example, Vietnam government, right? So maybe I do not know how long is your useful life of your car in Vietnam, right? Okay, so maybe currently car useful life is 10 years in Vietnam. Not very sure. Okay, I'm just guessing. Okay, Vietnamese government, now currently your car useful life is 10 years. Okay, of course, this can change. currently now is 10 years. Then suddenly your government announced, I'm going to change this rule, change useful life to maybe 6 years. Then this is what you should do to your existing asset. Okay, so the accounting treatment we are going to discuss now, is to reflect a change in depreciation estimate. For example, if your government suddenly changed the useful life of the car to 6 years. Okay, so something you can apply, right? If this day happened to you, right? If there's a change in your useful life, you cannot say, oh, government say must change to 6 years. Then I say, oh, I don't care. I still use back my 10 years. You can't do that, right? You can't tell the Vietnamese government, I don't care. I prefer 10 years, right? Okay, I will not change to 6 years. Okay, so here I'm going to tell you what you need to do. If the question states there's a change in residual value, useful life, and depreciation method, this is what you need to do. Okay, firstly, what you need to do first thing is to calculate the carrying value at date of change. Okay, calculate this number again. So say for example, this number maybe is 3,000. Okay, example. Calculate the carrying value at the date of change. They will tell you when is the effective date at the date of change. So calculate carrying value all the way until the date of change. Then next, calculate your depreciation. Okay, so depreciation, same thing. Normally we use cost minus scrap, then divided by useful life. Okay, so in this case, if there's a change, right, don't use the cost anymore. Use this 3,000. Okay, then minus any new scrap value. If there's a change in new scrap value, I will use the new scrap value. New scrap value, if any. Okay, then of course, divide by new useful life, if any. Okay, if there's new useful life in any, then you use the new one. Then if not, then you use the remaining useful life. Okay, so the key is, of course, when you calculate depreciation, I don't use the cost anymore. I will use 3,000. So that's how you account for depreciation if there's a change in the depreciation estimate. Right, so if I apply this rule, say for example, the amount I calculated, say is 200, then as usual, I'll close this off. I'll get something called carrying value after change. Okay, of course, sometimes people call it carrying value at SOFP date. Okay, then in this case, 3,000 minus 200, of course, I get my 2,008. Okay, then of course, this 200 is for SOCI, depreciation. Then this 2,008 is for SOFP. Like that. Okay, so this is accounting for change in depreciation estimate, right? So this is the steps that you need to do for change in depreciation estimate. right? So if the question mentioned there's a change in residual value, change in useful life, or change in method, then you just do this, right? Okay, then next is measurement subsequent to acquisition, right? So one word you often see is this word called measurement, right? So measurement you always see. So to me, I think measurement in simple English, right? Measurement means how much. Measurement means how much. Okay, so I think most of you will know there are two models, right? The one that you have done in your earlier paper, FA or F3, the cost minus accumulated dip, you have a carrying value. This one everybody is very familiar with, correct? Cost minus accumulated dip, you get carrying value. So actually there's a name for this model. This model is called a cost model. Okay, then of course there's another model which I think you are also aware. The other model is called revaluation model. Okay, now one thing maybe you are not aware is this. Okay, the thing you're not aware is you can choose. You can choose whether you want a cost model or a revaluation model. Okay, key thing is you can choose. Okay, you can choose whether you want a cost model or a revaluation model. Up to you, you can choose. So for example, motor vehicle, if I want, I can use revaluation model. Okay, it's rare, but if I want, I can do it. Okay, so same thing for furniture and fittings. If I want, I can also use revaluation model. Nobody can stop me. Okay, so remember, it's all. All means you can choose. Right, so of course the focus is not on your cost model. Cost model, nothing much. Your cost minus accumulated dip, nothing to explain. The focus is on your revaluation model. Right, okay, so these are the things that you need to know for your revaluation model. All these things. How to account for revaluation, treatment to this accumulated depreciation, right? So depreciation of an asset that's revalued before, transfer excess depreciation from your RR to your RE, and depreciation of a revalued asset. Okay, so these are the key things about your revaluation model. Okay, so some ground rule, how to account for revaluation. First thing is when you do, if you have chosen revaluation model, right? If you have chosen revaluation model, you have to apply to the entire class of the asset. Okay, if you have chosen revaluation model, you have to apply to the entire class. So this means what? If you have chosen revaluation model, for example, for motor vehicle, right? Motor vehicle, I have chosen revaluation model. Then I have to do revaluation on all my motor vehicle. Okay, so in this case, I have van and car. I have to use revaluation model on both van and car. I cannot say, oh, I like my car. So car, I will do revaluation model. I will use revaluation model. I don't like my van. So van, I will use cost model. You can't do that. Okay, so your model, right, have to be applied to the entire class of the asset. Okay, you cannot say van I use cost model, then car I use revaluation model. Can't do that. Okay, then the next thing is how often should you do revaluation? Okay, how often? Depends on your asset. Okay, so if your asset fair value changes very often, so fair value means market value. Fair value means market value. So how often should you do revaluation? Depends on your asset. If your asset market value changes very rapidly, something, for example, like your building, the recommended frequency of revaluation is every year, right? So building, their market price change very often, right? So you need to do revaluation every year, right? So if your fair value of your asset doesn't change very frequently, for example, furniture, then the recommended is every 3 to 5 years. Okay, right. So next, last part before we go for a break. Last part is revaluation. How to account for revaluation. So I think everybody also know revaluation will result in either a gain or a loss, right? So the thing is, how do you determine whether it's a gain or a loss, right? Okay, so to determine whether it's a gain or loss, you need to compare two numbers. The first number is the fair value. Okay, fair value at the date of revaluation. Then compare with carrying value at revaluation date. Okay, so obviously, if your fair value is more than your carrying value, then this will be a gain. If the fair value is less than my carrying value, then this will be a revaluation loss. Okay, then accounting for revaluation gain, I'm very sure everybody know. If it's a gain, right, it will credit this revaluation reserve. Sometimes people call it revaluation surplus. Okay, the latest one is called surplus, but sometimes I still use revaluation reserve, right? And you will debit to PPE. Okay, so I think most of you are aware, but maybe some of you are not aware. It can be credit revaluation surplus or P&L. Okay, so maybe this one you're not aware. Okay, later we will show you. Okay, then revaluation loss. Normally, the double entry is to debit this revaluation surplus. Okay, and then credit PPE. Right, so again, some of you may not be aware. You can also debit to P&L. Okay, so just bear in mind, this double entry is actually the shortcut. I think most of you, if they do revaluation, you do it this way. It's just a shortcut. Okay, so maybe I put it here now. This is actually a shortcut, not really the full double entry for revaluation. Okay, so bear this in mind, this is a shortcut. Okay, so let me just do the double entry, one example on revaluation gain or loss, which is on your next page. So how to account for revaluation? Okay, how to account for revaluation? So on year 2020, there's a gain of 5,000. So this one very clear cut. I think everybody will know. You will debit your PPE. Okay, and credit your RR. I put a short form. RR stand for revaluation reserve. Okay, then of course the amount is 5,000. 5,000. Okay. No dispute. Very easy. Right. So let's say, for example, there's a loss of 8,000 in 2021. Loss of 8,000. Okay. So of course, the easiest one is to account for your PPE first. Loss of 8,000. I will credit my PPE. 8,000. second. Okay. I will credit my PP 8,000. Right. Okay. Now the debit is this. Since the loss is 8,000, previously I have a balance in my RR of 5,000. I can actually offset my RR with 5,000 because I have a balance there, 5,000. Okay, then what will happen to the remaining 3,000? Okay, so I think most of you are able to guess. The remaining 3,000, right, will go to P&L. Okay, so this is the part, P&L. Okay, and year 2022, let's say I make a gain of 14,000. So of course, I do the easy one first. I will debit my PPE by 14,000. Okay, right. Then next, previously, what happened? Previously, I have debited 3,000 to my P&L, correct? Previously. So the standard allow you to credit back your P&L with the amount that you have debited previously. Previously, I have debited 3,000, so they allow you to credit back 3,000. Okay, then of course, the remaining figure of 11,000 will go to your revaluation reserve. Okay, right. So in short, this is the accounting treatment for revaluation. Okay, so now I think we go for a short break. We go for a short break. Then anything, if you want to clarify, you can type on the chat group. Okay, if all is good, then I also will show you my WhatsApp group. So let me see whether have you all added. Just give me a second. So I got 1, 2, 3, 4. 4 of you have added my WhatsApp group. So the rest I do not know. So please add, because I will share with you some important things from here. Okay. So if you have not downloaded the WhatsApp, please go and download. Okay. So remember, the number may be different from what is given to you. My phone was stolen quite recently, so this is my new number, right? So maybe you have an existing WhatsApp group, but that number is not valid, right? My phone was stolen, so I just changed to a new mobile phone, right? Okay, so this is the picture, right? So if you want, you can just add. Okay, so if not, then we go for a short break. So I see you in about 15 minutes time, right? 1-5.